Well, welcome everyone to today's webinar, When Internal Controls Break Down, 9 Often Overlooked Areas When Controls Fall Apart in the Accounts Payable Function. My name is Jim Kaplan. I'm president and founder of AuditNet.org, the global resource for auditors. Today's webinar is brought to you by Accounts Payable Now and Tomorrow. I'd like to give you some background information on our guest presenter, Mary Schaefer. Mary is a nationally recognized accounts payable expert. She's the author of 15-plus business books as well as several CPE courses for CPAs. Her bio is available at the end of the webinar. The slides that were sent to you this morning, so I won't spend any more time on that. You can read Mary's bio. We are pleased to have Mary with us today and that you could all join us for this event. Before we get started, we have some housekeeping items to cover. This webinar and its material are the property of AuditNet and Accounts Payable Now. Unauthorized usage or recording of this webinar or any of its material is strictly forbidden. Downloading or otherwise duplicating the webinar recording is expressly prohibited as well. We kindly request that everyone fill out the brief online evaluation questions that you will see at the conclusion of the webinar. Your feedback is very valuable. Please take a minute or two to complete the survey. In addition, because the webinar qualifies for CPE, we will be putting up polling questions according to NASBA standards. Those answering the questions in compliance with the standards will receive their CPE certificate by email within 5 to 10 business days. You must answer all the questions to receive your CPE certificate. We can only provide CPE for those who attend the live webinar. Those viewing the recording only are not eligible for CPE. You will have an opportunity both during and at the end of the webinar to ask questions. Submit your questions via the chat window at the lower right-hand box on your screen. Type your question and press return to send it. Any question we're unable to answer by the end of the webinar will be answered via email directly within 48 hours. As moderator, I will be launching the poll, showing the results, and monitoring any questions. If you're having any problem with the webinar software, check to see if Java is enabled and whether you have any pop-up blockers disabled. If you're still having problems, just log out and log back in again. If you can connect to the webinar in the audio portion but get kicked off at any time, just reconnect using the same steps you used at first. At this point, I'd like to turn the floor over to Mary to cover the agenda and begin the presentation. Mary?
Thanks, Jim. It's great to be here, and it's great to have the opportunity to talk to people who realize that it is important to have strong internal controls in accounts payable. Because in accounts payable, I believe it's all in the details. That's where the controls fall apart. They don't typically fall apart in the big picture items. It's all down in the details. So we're going to start off. I have some introductory remarks, and then I'm going to turn and I'm going to focus on 9 areas that I've identified that are often overlooked where internal controls fall apart. Again, these are not the big picture items, but these are the small nitty-gritty things that kind of sometimes slip under the radar. After we talk about these 9, then we're going to talk about some controls that you can put in place to make sure that these issues don't get you in trouble in your organization. Hopefully to tighten up the weaknesses that are created by some of these process breakdowns. Then we will, as we get towards the end, we're going to talk about some overall best practices every organization should be using in its AP function that will help ensure tight internal controls. And then I'll have some concluding remarks, and then we'll have time for questions. Please, if a question occurs to you as we go along, just type it in and we'll take them all at the end. And if for some reason we don't get to them all, we will answer them by email afterwards. Now, I know when you signed up for this webinar, Jim had a polling question up there for you, and I was pleased to see that slightly over half of you had indicated that you had either good or great internal controls and accounts payable. You've marked off either a 4 or a 5. And while that's great news, it also means that almost half of you didn't have great controls. You either you thought you had average controls or less than ideal. So hopefully we'll address those issues today. So sometimes when I talk about these things, people will say, "Oh, what's the big deal? Why are you making such a big deal?" Let me tell you why internal controls matter so much, and some of these little nitty-gritty items are important. Weak controls, as you know, open the door and make it easier for employees to commit, or for anybody to commit fraud. Now, our employees as much as we love them, a few of them are not so honest. And if you've seen any of the statistics from the Association of Certified Fraud Examiners, you'll know that we are most at risk from a long-term trusted employees. Not all of them. Most of them are they've earned the right to be trusted. But a few of them will sometimes take advantage. And if they're involved in your day-to-day operations, they'll know where your weaknesses are. Many frauds, unfortunately, start with an honest mistake. The thing that happens was a mistake. The person did not mean to defraud the company. However, once they got the second payment, kind of a light goes off and they say, aha, these people, they don't really have their act together. If I do this again, I can get paid twice. Some simple examples, for example, an employee who might put through something on a travel and entertainment expense report that was paid for with the company P card. Might have been a mistake the first time, but once they realize it, they realize, these folks don't check between the two. Or a company, one of your vendors who might send you a second invoice, perhaps because you paid them a little late, and when that second invoice gets paid, a light goes off, and the vendor thinks, if I send the second invoice, they'll pay it, and so they start doing it. So another reason why we want to tighten up our internal controls. The next reason is with these second payments that we're talking about, whether an honest mistake or fraud, it doesn't really matter. It was a duplicate payment. People say, okay, well, so what's the big deal? Won't the vendor return the duplicate payments? And the answer to that is rarely. A few of them do. Maybe 1 or 2 out of 100 will return the duplicate payment. But most of them will keep it on their books. Now, sometimes when I say this, people will say, yeah, but aren't open credits unclaimed property? And if you're in the United States or perhaps the UK, you're supposed to turn this over to the states at an appropriate time. And they're right. Open credits should be turned over to the states as unclaimed property. But there are 2 issues here. Number one, the first thing is they should be turned over. Frequently, they're not. But more importantly, and probably a little bit more frightening, is the issue of what we call disappearing credits. Quarterly or maybe annually, the accounts receivable person at your vendor will be looking through their records. They're trying to clean them up because it's the quarter end or the year end, and they'll find these open credits. And what are they going to do with them? Well, they take them and they use them in several ways. Not all of your vendors, but a surprisingly large number. The first thing that they do with them is they use them for old invoices that are outstanding. Now, the reason those old invoices are outstanding may be because it was a disputed item. You really don't want to pay for that item. The vendor, the AR person, doesn't really know that, and they see the open credit, they see the old invoice. They think, let me do them a favor. I'll clean this invoice up. So they take that payment and they apply it to an invoice you never had any intention of paying. They also will sometimes use these credits to cover late fees, accrued late fees. Now you may be saying, but we don't pay late fees. And you don't pay late fees. Your vendor may be charging them, you don't pay them, but the vendor accrues them on the books. Similarly, they will use them for unearned early payment discounts. A number of companies out there, they'll pay the invoice, an invoice that has terms of, let's say, 210 net 30. They don't pay it by the 10th date. They pay it maybe on the 30th or the 31st or the 25th, but they still take that 2% discount. And depending upon the relationship, the vendor may not complain too much, but they may accrue these unearned discounts that you took. And then when you have an open credit, they use it to get that off the books. So duplicate payments are problematic. You'll never know about them in many, many cases, and we want to make sure we don't make them so we don't end up in this. Obviously, when we have weak controls and we make duplicate payments, it affects the organization's profitability. It also affects the organization's productivity, because even if, for example, you're getting 2 invoices and you don't pay that second invoice, the AP staff still has to spend some time working with that second invoice, identifying it, and figuring out, oops, this is a duplicate, we shouldn't be paying it. Wasted time, time that you don't need to be spending. There are regulatory issues. If I were going to talk about T&E, today, I'd spend a lot of time talking about your accountable plan and your accountable plan status. And if you let some of the things go on that we're going to talk about in T&E, you really are endangering the organization's accountable plan status. And of course, everybody's favorite, SOX, Sarbanes-Oxley. So today we're going to talk about what I call overlooked issues. These are what I call the tip of the iceberg when it comes to internal controls and accounts payable. I don't want you to go away thinking that, oh, if we fix all these issues, we'll be in good control here. The reality is internal controls and accounts payable is a much bigger job. I know I've written a 5-credit CPE course on it, so this is just a little piece of it. So I just want to make sure, I know that you listening know this, but I want to make sure that you understand that I know it also. So let's take a look. Let's jump into the 9 areas where I think that sometimes we might let things get ahead of us, not intentionally. And the first one is called the segregation of duties oversights. Now, when it comes to accounts payable and the whole procure-to-pay function, the P2P function, in an ideal world where we've got perfect segregation of duties, no one person should be able to perform more than one leg of the transaction. And many of us are quite good about setting this up and making sure this doesn't happen. But this is where we fall down. Many of us promote from within, and I want to make it clear when I talk about promotions that I am in favor of promoting from within. But when we promote from within, what we don't do is often is close off the system's control where the person can get in and access the system. So let me give you an extreme example, and I know it's extreme. I've made it this way so to make my point. So let's say we hire somebody fresh out of college. They come into the accounts payable department and they start as an invoice processor. So we give them access to process invoices. So they start and they're going along and they're processing invoices, and they do a good job for us. So we take it one step further and we promote them, and now we put them in charge of making payments, printing checks. And so we give them access to that part of the transaction. And they go along and they do a good job, and after a while, now we promote them again and we put them in charge of master vendor file. Okay? Now what we have, if we have not closed off system access to the old jobs, we have a person who can process an invoice, print a check, and set up a vendor in the master vendor file, okay? Now, what many organizations do is that you'll run a report showing which of your employees have access to what. And if you've never done this in your organization, you may be horrified at what you find. So the big thing here is that when someone's promoted from within, that their system access from the old job is terminated. The next thing that we see when it comes to segregation of duties is I'll go into a company and they'll show me how they've got everything set up, and they've got it set up perfectly, exactly as you would probably set it up yourself. And then they say, oh, but there's one exception. And what's the one exception? Either the accounts payable manager or usually the controller, it's usually one of those two people, has access to everything. So I'll say, well, why do you have access to everything? Well, it makes it easier for us to train. It makes it easier if someone's out and the accounts payable manager can just pop in. It makes it, the controller wants to be able to go in and see what everybody's doing. You get some sort of an answer like that. There may be a good business reason for it, but remember what we said, we talked about a slide or two earlier about the long-term trusted employee. It completely negates your segregation of duties. So let's not go down that road if we can possibly avoid it. Now, I could spend a long time talking about IRS and what you have to do to make your plan an accountable plan status so that you can deduct your expenses. We're not going to do that today. But realize that if you have some of the problems that we're going to talk about, you're reimbursing for things that you shouldn't, which could put your plan in jeopardy. The first problem that we've seen, and this is a relatively new one, is what I call the gift card problem. And this is where one of your employees takes somebody out to dinner or to lunch, a client, whatever. It's an appropriate business expense. And then at the end of the meal, they take a business card, they purchase a gift card and they put it on the meal receipt. So let's say you had a $75 lunch, they purchase a $25 gift card, now it's $100, and they submit for the $100. And that gift card, by the way, is for their own use. It's not a gift for the client. We're seeing this is a new problem. It's only recent that we've started to see this because companies are not, it's only recently that restaurants have started pushing, if you will, gift cards so much. I'm going to move. So the next thing we see is the issue of what was really ordered. This is important if you have, for whatever reason, a no liquor policy. Now, more organizations than you might think have no liquor policies. For example, somebody who's getting grants, government grants or grants from nonprofit organizations may have an issue with this. It also, you need to see what was really ordered. I had one reader write in and tell me that they started requesting meal receipts from one particular employee because he was having all these Friday night dinners. And I thought Friday night was an odd time to be conducting business for the organization. Maybe once or twice, but it just seemed disproportionate to them. And when they got the receipts, what it showed was that there were 2 adult meals and 2 kiddie meals. Now, I don't know about any business lunches or dinners that you've gone to, but I have never in all my years been to one where there was a kiddie meal ordered. So again, it makes you question. Along the same lines, we have the issue of who attended. Were there 4 people there or were there 8 people? This gets to be an issue of spouses who really don't have a business relationship, and then you have to wonder, is this really a business meeting or something else? Now, sometimes people will say to me, I don't know what you're making such a big deal about. This is nickel and dime stuff. A few comments on that. Number 1, fraud is fraud. Number 2, many, and this is really important, many larger frauds are uncovered when they start looking into a T&E fraud. And number 3, when you have one of your employees or 2 of your employees doing this, they tend to talk to each other about it, and before you know, you have more employees doing it. So it's really not a good thing. The next issue that I want to talk about is what I call rush checks or ASAP checks, or they're these checks that we need at the last minute to cover unexpected contingencies. Now, typically, a best practice is, well, let's never issue any rush checks, okay? Well, that's nice in this ideal theoretical world, but in the real world, it's really not. It's not possible. From time to time, we will have to deal with rush items. But when we do, let's do it in a smart way. First of all, let's keep them to a minimal number. Let's make sure we get as much documentation as possible. A lot of times, there's very little documentation associated with it, and then when the real invoice does show up, it gets paid a second time because there's no way to tell that these 2 payments were from the same thing. One other issue about rush checks, I'm not saying every rush check is a fraud. It's not, absolutely not. But a higher percentage of rush checks will be fraudulent than ones that go through your normal cycle. I also want to discuss for 30 seconds or so vendors who scream up and threaten on the phone. Now, if you've paid them late, it's quite possible that it is a vendor who needs the cash, maybe a small business, and your payment is maybe holding them back from making payroll, in an extreme example. But crooks also know if they call up and scream and they threaten to put on the company on credit hold, they are more apt to get a payment that they're not entitled to. So just be careful. One of the new areas that we're starting to see, as especially in the United States, as we move towards electronic payments, the rest of the world is light years ahead of us on this, but we're starting to see some of these payments being made outside AP. Typically, they're ACH payments and or wire transfers. Now, that in and of itself is not a problem, okay? It doesn't matter where the payment's made, just as long as it's being made. Where there is a problem is when the people making those payments don't follow the same rigid standards that they do in accounts payable. So that might mean using a 3-way match making sure the purchase order and the receiving document are extinguished, using rigid coding standards when they're entering information. A lot of times, if people don't work in accounts payable, they don't understand the importance of it, and then when they don't follow these standards, then an invoice shows up, accounts payable goes ahead and pays it because they don't realize that the payment has already been made. So, end result, you made a duplicate payment, which you don't really want to do. And is it time for a polling question, Jim?
Yes, it is. Let me go ahead and launch the polling question, Mary. Okay. Please take a minute to read the question and respond with your answer. Remember that in order to receive CPE, you must answer the polling question.
And you know, Jim, I can't see this.
That's okay. I can see it.
Okay, so you're going to have to comment.
That's what's important. I will show you. I'll show you the results when we are complete.
Okay.
And we did have one question that came in. Maybe you could address that while
Sure.
they're responding to the poll. And the question is, and maybe you'll be covering this in a minute. What are the potential risk of duplicate vendors in the vendor master files? That's a common question.
That's a great question. The simple answer is that's a great question. The best control that you have against it is that you regularly cleanse your master vendor file. You use a rigid coding standard, really rigid, or naming convention. When you enter data, you limit access, you limit the people who can access it, and you do some periodic checks. So, for example, you always get the tax ID number. You look for duplicate tax ID numbers. But that's a very good question, and it is an important issue.
Great. Okay, we've got 97% that have voted, so we're going to go ahead and close the poll and share the results. Now, can you see the results now, Mary?
Nope.
Okay. The majority said number 2, not closing off old system access when someone is promoted.
Good. Good. So they listened. Great.
Okay.
Well, they may have known it. All right.
Okay, let me go ahead and hide the results, and you can go back and put it in slideshow. There you go.
There we
Great.
go.
Okay.
All right. So when our employees separate from the organization, there are some things that we're supposed to do, but then there are some things that kind of fall through the wayside. So let me go over a few of them, and you may be able to think of more. But the first thing that we tend not to do, or sometimes gets lost, is we forget to get back the employee's credit card. And this could be a P card, excuse me, a T&E card, a fuel card, a one card, whatever kind of credit cards there are. Now, getting them back is just the first step. It is not the only step, okay? An employee who is looking to play games will, with the credit card information, will write the information down before they give you the card back. So in addition to getting the cards back, we must immediately notify the bank of the cancellation of the credit card, and if that person had any signing authorization or was able to make electronic payments or authorized wire transfers or anything like that. We need to do this immediately. Now, there's often a breakdown between HR and the card administrator or AP in that they're not notified. That's the most common breakdown, if you will. So get the card back and notify the bank. Most importantly, notify the bank. Okay, the next thing we don't do, and I've kind of alluded to this when we talked earlier about segregation of duties, is cut off their system access. They do not need to be able to get into the accounting system and do whatever it is they're going to do if they've got malice at heart. Now, sometimes people think, well, Joe is leaving. He got a great new job, big raise. He was always happy here. We don't have to worry about him. Maybe, maybe not. You really don't know what's going on in people's minds and how they really feel. So let's be on the safe side. Let's not make any exceptions. Remember your long-term trusted employee. Cut off everyone immediately when they leave. Along the same lines, if you have your employees in the master vendor file for T&E purposes, immediately go in and deactivate them. You don't want them submitting another expense report and getting paid for it, especially if you're in any sort of an automated environment. Okay, now let's talk about recurring payments. This might be for leases. It could be for equipment leases, it could be rent, it could be for a whole bunch of different things. Also, we can talk about loans that we're making payments on. When we set up recurring payments, typically what we do is we put in an end date, or hopefully we put in an end date. So we've put in our end date and we think, okay, we're good to go. I don't have to worry about this anymore. Maybe, maybe not. Many times, especially when you're talking about equipment leases or loans, either the lease will be let's just talk about a copier machine. The salesperson comes in, he says, oh, we've got this wonderful new machine, it does whatever, whatever, whatever. We'll terminate your old lease, how about you start this? We'll cancel the old one. And so the business person makes the transaction, they send down the information to get the new payment started, and everyone forgets about the old payment. Maybe the vendor returns them, maybe they don't. Remember that. So when we need to keep on top of our early termination of leases and make sure that when a lease is terminated before its maturity date, that we notify the person who's making the payments. Same thing goes with loans, especially with all refinancings. Every time I think interest rates have gotten so low they can't possibly get lower, down they go again. So early payments, this is especially important, for example, if you've got a lot of financings or you're in the real estate business. Along the same lines, we've got other types of repetitive payments that we make for our employees. They might be phones, it could be subscriptions, and I'm not only talking about magazine subscriptions, I'm talking about some of those online services. Some of them are very expensive, some of those access to online databases. We need to stay on top of this information because the employee will leave, off they go. Trust me, they don't think about this, and you're still paying month after month for the service that no one's using. So we need to periodically check up on this and make sure that we're not continuing to make repetitive payments when no one is using the service. This next one is one of my pet peeves because it's so simple to do, and probably only 10% of the people who are online listening to me today are doing it. And this involves taking the addresses from your HR department, from your employee file, and running it against the addresses in the master vendor file, taking out, of course, your T&E. So your vendors, your non-employee vendors, you run that against the HR file looking for duplicates. Now, the reason I get so upset that companies don't do this is you can do this in Excel using the conditional formatting function. It is really simple to do. When you get your matches, you need to investigate them because some of them will be false positives. Simple example, you might have an employee living in a big apartment house in a big city, and you might hire an independent contractor from the same, who happens to live in the same building. They may never even know each other. So you get your matches and you do your research and you look for matches that have no good explanation. And you might find an employee masquerading as a vendor. You might also have a situation where you've employed someone who has a relative who works for the organization, and maybe your company has a policy against that. Now, people will say to me, oh, is this really worth doing? And a lot of times when I'm giving a talk in public, people will say, I don't know, it's just one more thing we have to do, and we've already got too much to do. I was giving this talk last year, and a woman in the audience raised her hand, and she said, we take this one step further. Every time we get a new vendor to set up in the master vendor file, we run the address against our employee our employee's address. And she said in 6 years, they found 2 instances where an employee was trying to put through a phony vendor and take advantage of the company. So is it worth doing? She certainly thought it was, to uncover those 2 instances of what could have been rather large frauds. They were nipped in the bud. And finally, my last item, which if we were in person, I would ask you how many have you petty cash box, and I'd hope nobody would raise their hand. However, the reality is about 25% of you probably would be raising your hand, and that's where it stands. Even though we talk about this, we talk about petty cash boxes are inefficient, there's all sorts of problems associated with them, we still have about 25% of the companies out there who have them. And I know I've had responsibility for petty cash for a number of years at a number of different organizations, especially when I was at the beginning of my career, and basically I did what I was told. And I can tell you that they were out of balance more often than they should have been, and it was never an instance where there was more money in the box than there should have been. It was always something. With T&E cards, and we don't really need them. I really do believe they're a bad practice, not necessarily just not a great practice. They're a bad practice. They're inefficient. They waste a lot of time. And it encourages sometimes employees to play games when they have things that they wouldn't make it through on the regular T&E. It's like a light goes off and they say, oh, well, we can't get through, why don't we put it through petty cash? And away it goes. Not only that, you sometimes have double dipping where somebody will put in for reimbursement through the petty cash box and also put it on their expense report. So best case scenario, get rid of it. I think I'm probably preaching to the choir here, since we have mostly internal auditors on the line, but it's one of my pet peeves when it comes to internal controls. All right. Let's talk about some solutions, about what we can do. Let's start with the basics. Don't make any exceptions to our appropriate segregation of duties. And don't make any exceptions when we're setting up our controls and our best practices. This is especially important when we're talking about payments made outside AP. Now, the simple solution to that payments made outside AP is that those employees who are making those payments should go through the same training that your AP folks go through when they make payments. And as internal auditors, maybe you'd want to watch over them a little bit closer until you were comfortable that they know what they were doing. The mistakes that are sometimes made are leaving purchase orders and receiving documents open when they should have been closed, which is what causes the duplicate payments. But it also can cause you to have inaccurate financial statements, and it could play havoc with your accruals. So there are a number of reasons why you might want to do this. And again, remember, your employees know where your control weaknesses are, and those few who want to play games will take advantage of them. And one last thing, again, you can run a report showing which of your employees has access to what parts of your system, and then you can review it and close off the ones that they shouldn't, because those were from jobs that they had 2 and 3 years ago. When it comes to the T&E issue, things have not gotten any pretty recently. There's all sorts of games going on. Basically, we did a survey of our readers, I don't know, a few months ago, and we found out that currently almost half of them are requiring receipts for everything, and about a quarter of them are considering asking for that meal receipt. All this helps with what I call the $24.95 problem, and this is a problem that some companies have when they have set their limit for receipts at $25. And when they do this, they find an inordinate number of reimbursement requests right under the $25 level, so $24.95, $24.50, for meals and things that they are certain did not cost that much. But again, they don't require the receipts, so that's that. So we're starting to recommend that you get the meal receipts and you get receipts for everything. Now, when we do this, people will say, you've got to be kidding. We've got enough work as it is in accounts payable. And that's right. We're saying collect those receipts, require your employees to submit those receipts. We're not saying check them all. We recommend that you basically use spot checking. One last item I'd like to mention before I stop beating this horse to death, and that is that the IRS has a receipt level of $75. This went into effect in 1995. Very few U.S. companies have followed them down this path. We can only imagine why. Let's talk about some controls related to the accounts payable process. We want to have appropriate segregation of duties. We want to standardize our processes. We want to make sure that if I process an invoice today and a duplicate of that invoice comes in 2 weeks from now and Jim processes it, he'll be able to catch it because he's doing things exactly the same way as I am. So when it comes to this, I always tell people, you want to encourage your employees to be creative, not when it comes to processing the work in accounts payable. When it comes to the day-to-day responsibilities, it's kind of a case of do as I say, no creativity. If you've got a good suggestion, go give it to the manager, and if it is good, then they'll incorporate it and everybody will use it, but don't take it upon yourself. The last thing that we do is sometimes we add risk unnecessarily because we don't even think. We just automatically do some things. And let's take a look at what the things that we do that add some risk to our payment system. For starters, some companies will make all executives authorized signers for checks and wire transfers and maybe even for to release ACH. There's no reason for that. It just increases risk. Just the only people who should be made signers are the people who are actually going to do it. Same with P cards. Only give them to people who actually need them for work. This is not a privilege. It's a tool for doing the job. We need to get full documentation. Sometimes, especially with our rush check requests, we don't get the documentation we need, and we end up with very little. If you find yourself in a situation where, let's face it, the accounts payable processor, if the admin for the CFO is there waiving a check request that's signed by the CFO saying we need this now, that person is going to process that, even if there is no backup. But what you can do is follow up afterwards and get that backup. When it comes to employees, are we supposed to do the polling question now or after the slide, Jim?
After slide 10. I'm sorry, after slide 20.
Okay, so let me do this.
Okay.
So when it comes to our people, just remember that most of our employees are honorable, but there are a few long-term trusted employees who are not, and we just have to, since we can't tell who they are, we have to have our controls go over everyone. Don't forget when an employee leaves, get the credit cards back, cut off their access. One of the newest things that we're seeing are the last two items, and these are things that we can do. This is within our control. There's no reason why we can't do them. The first one are mandatory vacations for anyone having to do anything with payments. And what this means is that the person takes 5 consecutive days off where somebody else does their job, not they take 5 days off and they do it from home. The new person comes in, they do the job, they have their own passwords, we don't share passwords, and the feeling is if there's any sort of a fraud, it will be uncovered. The next thing is that we have some job rotation where possible. So if we've got 10 processors, for example, 10 invoice processors, we maybe move them every 6 months so they don't handle the same accounts. These last two things, as I said, very easy to do within the realm of what we can all do. Okay, now Jim.
Let me go ahead and launch polling question 2. We've got a lot of questions that are coming in, Mary.
Okay, good.
Which means that they're really paying attention. Okay, polling question number 2, I'm going to launch that. When an employee leaves the company, which of the following? Okay, so which of the following should you do? Credit cards are retrieved from the employee. Banks are notified to cancel the credit cards immediately. Employees are deactivated in the master vendor file. All of the above. they're really paying attention. We've got 90% that have voted. We'll leave the poll open. And we have a whole bunch of questions. I'm going to have to go through the questions and try to prioritize, Mary, and pick out some that are spot on and share them with you. So let me go ahead.
I just read what is MVF, and I'm sorry about that. Master vendor file.
Master vendor file.
I always mean not to do that, and then I go ahead and do it. Okay, and lastly, when it comes, did you do the answers?
Let me go ahead and close the poll, and it looks like we had pretty much a majority here, and share the results. And basically, they said all of the above.
Great, great.
Let me go ahead and hide that. Okay.
Okay, let's go back.
Put it back in PowerPoint.
And let's go back to from the current slide. Okay. Here we go. Okay, and lastly, let's try and get rid of the weak or poor processes. Get rid of it or minimize it. So get rid of your petty cash box. If you can't get rid of your petty cash box, start to whittle it down. Get rid of the stuff that's in there that can be paid otherwise. Sometimes you'll have people who it's just easier to get it from petty cash rather than do T&E. Don't tolerate that type of behavior. Rush checks, get rid of as many of them as you can. Have strong processes. Also, one of the things I like to say with rush checks is don't issue rush checks, issue ACH payments. So if there is a need for an immediate payment, don't give a paper check, give an ACH. And of course, I'm probably preaching to the choir here when I tell you never return a check to a requisitioner. If the person has a business reason why they must have it, then have some sort of special form that has to be signed off by two people to make sure that it's legitimate. All right. So as we head towards our close, I want to go over some best practices with relations to internal controls, with a special focus on the items that we've spoken about today. We could talk about internal controls for a long time. So one of the things, I also talk a lot, as you probably can guess, about best practices when it comes to accounts payable. And one of the things that I like about best practices and internal controls is they go together. Rarely, in fact, I can't think of any instance where a best practice does not strengthen your internal controls. Having said that, best practices are not set in stone. They are changing in the accounts payable world, and they're changing, I don't want to say as continually, but there are changes and ongoing. So just because we get our operations set up today and we're using accounts best practices today, we need to periodically go back and review them to make sure that we're still using best practices. And we have things like technology, changing regulatory issues, stronger regulatory issues, fraud, which is continually changing. There are many, unfortunately, new types of fraud. And again, the efforts for cost containment, all of these are changing best practices. When it comes to our process, our accounts payable process, we need to employ rigid coding standards. This means everybody does it the same, but it also means we even enter data the same. So, for example, we have a standard that says whether or not when we're entering independent contractors, we enter their name Mary Schaefer, or do we enter it Schaefer Mary? If I do it one way and Jim does it another way, we're increasing our chances of a duplicate payment. Similarly, we want to address all the issues related to vendor names. If I have a company called The Gap, for example, do I put the in, or do I just put Gap? No right or wrong way to do it, just as long as everybody does it the same. Your coding standards for your invoices should match the naming convention that you use for the master vendor file. They should go together, and they should be rigid, and again, no creativity. We want to limit access to the master vendor file, and as much as possible, we want to pay people on time. If we pay people on time, they won't send us a second invoice. We don't have to worry about falling into the hole of paying it twice. And I want to talk about and move as many payments away from paper checks. In the United States, we call our electronic payment system the ACH, which stands for the Automated Clearinghouse, and we want to move as much of our activity there. It's cheaper than paper checks, and it's more efficient, and paper checks a nightmare in and of themselves. When it comes to rush payments, minimize them. I'd like to say never make them, but the reality of the world is that we sometimes find ourselves in a situation where we have to make them. Do not return them to the requisitioner. Make sure you have your full documentation. If you don't have it before the payment is made, get it after the fact. Don't forget about your good practices, your three-way match, extinguish the purchase order, and the receiving document. And again, made electronically. When it comes to T&E, a few things. Number one, and this is probably the number one problem with all T&E types of fraud, is many managers, sign whatever's put in front of them. They don't even look at it. They just automatically scroll their signature on it. When that happens more than a few times in a row, eventually the employee realizes, oh, manager's not looking. I can put in for anything. And they do. So you need to make managers responsible for what they approve. How can you do this? A few ways. Number one, in extreme instances, and I only know of one organization that does this, a manager who signs something that's clearly fraudulent or inappropriate on a T&E is subject to being fired. Now, the organization that does this, when they were telling me this story, I said, oh, and I bet you only had to let one person go. And the person said, who was telling me the story said, nope, you're not going to believe it. We had to let 2 people go. That company was under a lot of scrutiny. It was the local newspaper had been publishing stories about their T&E. It was a hot topic, and that's why they took such an extreme measure. You or your organization is probably not willing to go that far, but what you can do is make it part of the annual review, and if they've approved something that they shouldn't have, then they can get dinged on their receipt, on their raise. I'm reading ahead. Get receipts. Get receipts for everything. I'm not saying check them all, but collect them, so at least your employees know that you're looking at them. And there need to be consequences for people who play games or commit fraud with T&E. They need to be for both the employee and the manager who approves it, and people need to know about this in advance, so it needs to be in your T&E policy. When it comes to fraud prevention, you know, people sometimes stick their head in the sand, and they're like, oh, this would never happen here. Yes, it would. Recognize that it happens at both big companies and small companies. There's no such thing as too big they wouldn't dare, or too small, oh, we don't have enough for anybody to be worried about. Everybody does. Stay on top of the fraud issue. It is continually evolving. The crooks are smart. They are continually developing new frauds. It's kind of like a game of cat and mouse. The crooks come up with a way to steal from you, to commit a fraud. They do it. The financial community comes up with a solution to block that fraud. Then the crooks come up with another fraud, and then the banking community reacts, and so it's back and forth. So just like best practices, you need to stay on top of it on a very regular basis. Don't ignore T&E fraud. Remember, you can sometimes identify larger frauds just by finding the T&E fraud. Have written, detailed policies and procedures so everybody knows what's expected. There can be no excuses. And periodically go back and monitor what your employees are doing, how they're processing invoices, how they're processing T&E, and make sure they're still following your standard procedures. Nobody's gotten creative and found a shortcut. And if you still have those awful petty cash boxes, surprise audits. And some concluding thoughts before we have our last question. Strong internal controls are critical to basically any organization that wants to be profitable. And when we talk about internal controls and our accounting structure, accounts payable is an important component. After all, it's our money. Don't overlook it. Sometimes it doesn't get its full fair share. One of the other things that I recommend, and probably only 1 in 3 companies does it, is to have a payment audit. Now, when I say this, people are like, ooh, but reality is if you have a payment audit and you don't have a problem, they won't find much. And since most of these are done on a contingency basis, it won't cost you much. But if you do have a problem, they'll find the money. You should also get a management report, which will help identify your problem spots. So in closing, before we have our last question and then our questions from the audience, I want to say just feel free to share this with the other folks in your organization, your controller, especially your accounts payable, and any of your accountants who work on AP matters. I know I frequently get questions from people who work in AP about management wants to do this or management wants to do that. What can we do? And I always tell them, when it's a control situation, get internal audit involved. They'll be on your side, and so share with them. And our last question, and then questions from the audience. Jim.
Great, Mary. This has been excellent. Let me go ahead and launch the final polling question. Okay. Which of the following is not a recommended best practice for strong internal controls on the process side of accounts payable? Please select one of the four choices, and as soon as we get the majority voting here, we'll go ahead and close. I will say that I've reviewed a number of Mary's books on best practices in accounts payable, and somebody asked what T&E is. That's travel and entertainment. So you know, these are great books, and they're great additions to your library. Mary is a recognized expert in this area, and we are so pleased to have her with us today. Okay, we've got 92%. So it looks like we'll have about 10 minutes for questions, and we will stay a little bit past if we can try to answer as many of them as possible. If not, then Mary will hopefully have some time to respond to the emails.
Yes.
Okay, we've got 97% that have voted, and we'll go ahead and we will close the poll and share the results. And it looks like the majority said allowing processors to set up new vendors at will.
Okay, good.
Okay, good. We'll go ahead and hide that. And Mary, you should be able to see these questions as well.
Yes, I have that little box, but if you want to go ahead and read them, that would be great.
I can do that. Let me go through and try to pick some out, and you can be showing that final screen. I think I've hidden that. Yeah, you've got the email link up there. Okay. With the advent of services such as PayPal, how do you screen these vendors against normal accounts payable as opposed to purchase cards? This is from Kevin.
Okay. PayPal vendors would be, you have people paying, I'm guessing he has people paying him directly with PayPal?
Yeah, you know, PayPal is more of a merchant account, so this would be like a bank. So it's really...
It's also consumer payments, typically, and most of our people. So you'll have I think a one-off payment. If the person who asked that question has more details and wants to email me afterwards, please do.
Okay. Let's see. We've got what's your view of paying to a payee different from the vendor, but they belong to the same group of companies? This comes from Arnell.
I would have a problem doing that, especially if it was a 1099 payment, because you could have 1099 issues, number one. But number two, it's going to make tracking in your system difficult to figure out who was paid and what. I would wonder why they wanted to do that, and you'd have to give me a very good business reason to get me to do it.
Okay. All right. Here's a question from Jillian. Do you have any tips on best practices related to as cheatable items? How to minimize fraud risk related to these liabilities?
Okay. So let's talk about unclaimed property. And basically, in the accounts payable world, that is uncashed checks. That's another word. Unclaimed property, abandoned property is cheatment. The number one best way to minimize your unclaimed property obligations is start to pay electronically, because you'll know the next day if those payments bounce, and they really do. However, if you are if you do have those uncashed checks, you have to do your due diligence, and then you have to do your reporting. The person mentioned fraud. One of the things with segregation of duties is that you want to have the person who is doing the unclaimed property not be the same person who is handling your bank recs. And finally, a tip that when I heard it, I was amazed at it, but it came from one of my readers. And he told me that what he does is he looks for former employees who've left the company and have their last paycheck still outstanding, which is a significant part of unclaimed property for many. What he does is he looks for them on LinkedIn and Facebook, and when he finds someone who he thinks is a former employee who they have information, who they have a payment for, he sends them an email saying, "Are you the, John Smith who used to work for ABC company?" And only when he confirms that they really are, then does he identify that they have money for him. So a few things: absolutely do what you're supposed to do with unclaimed property. Follow up, do your due diligence. But if you start to pay by ACH electronically, you'll find that your number of uncashed checks goes down.
Okay, very good. Okay, this one comes from Jose. Are there any statistics of AP fraud in the U.S.? And I'm not sure if the ACFE in their annual report to the nation report that.
Well, what they talk about is different types of fraud. They don't call it accounts payable fraud, but for example, they'll talk about check fraud. They talk about ACH fraud.
Mm-hmm.
They talk about fraudulent disbursements of cash from cash registers. There's a few other types of fraud. So it's not broken down specifically by AP, but it is broken down into the different types of fraud.
Okay. Let's see. We have a lot of questions here. What do you recommend for companies who don't have a three-way match? Invoices are all signed manually. This comes from Denise.
If you don't have a three-way match, basically you're in the same boat as companies who are paying for things that are outside the purchase order cycle. Okay, so what you need to do is you need to have stronger internal controls. You need to make sure that you have the appropriate segregation of duties, and you are an ideal client to have a payment audit done. Okay, there's no magic bullet here, but again, and the other thing that you can do is before you make your payments, do some simple checking. So for example, you can check and see if you've issued a check for the same dollar amount in the last 90 days, and things of that nature.
Okay. Let's see. Here's a similar one. This is from Mohammed. How can we control accounts payable if it's a small firm with a small number of employees working in accounts payable? I'm sure that you're going to say compensating controls, basically.
Compensating controls, but the other thing is that we see is sometimes some of the tasks that are handled in accounts payable in a traditional model might be moved to another area. The most common ones are master vendor file, that might be moved to purchasing or accounting, and the other one is getting checks signed. But you need to be extra special careful. You need compensating controls, and you need to constantly be checking.
Okay. Here's another one from Arnell. How often should we perform a payment audit?
We used to say every 2 years. Now I want to tell you, because of the case of the disappearing credits, for example, you might want to do it more frequently. Some places do it annually. Some places do it quarterly. Some kind of have an ongoing audit. You can't have it too frequently, unfortunately.
Okay. Here's a question from Jian Schuling, and this one is in regards to Benford's analysis.
Mm-hmm.
Recommended for accounts payable fraud audit. However, it seems hard to find frauds by looking at the results. We identified a high spike in the first 2 digits of 20. The AP manager said it just happened and no specific reasons for it. As an auditor, how should we proceed and interpret the Benford analysis results?
Okay, so for those who don't know, Benford analysis looks at all your payments and looks at the leading digit, and through various studies, most of your payments should start with a 1, then the next largest number with a 2, and the next with a 3. I would investigate. I wouldn't just say, I would not accept the statement that's what it is, that's just the way it is. I would have looked at those payments that were in the questionable range, and I would have just done some investigation. I would have taken the payments in the questionable range and sorted them. Did many go to the same vendor? Look at the address, look at the taxpayer identification number. The accounts payable manager may have been correct, but I just would have done a little bit more research before I was willing to assume that was correct.
Okay, we're approaching 3 o'clock, so I'm going to ask maybe 2 more questions here, cover 2 more, and then we can close it out. This one is for disbursements through benefit payment, ACH, and wires. Currently, we, that's internal audit, looks for disbursement proper authorization and agree the disbursements to the systems reports. Is there anything else we need to do?
Again, you need to make sure that they are, the big thing that frightens me is that the purchase order and the receiving doc are extinguished, assuming that the payments were made outside AP. And include that question when you send me the questions, Jim. I want to think about it, and I'll send the person an answer.
Okay, let me see, going down here. Here's one. A lot of, this one from Richard, a lot of credit card companies usually contain incentives to encourage new members to sign up, frequent travelers, spending points.
Right.
Although not a direct expense to the company, what type of controls could be put in place to prevent this, or is this not really a concern?
Oh, yeah, this is a concern. Okay, number one, if we were doing an expanded thing on T&E or on corporate procurements, what I would tell you is that you should have a corporate card, and employee use of it should be mandated by your employees. So they have to use the company card. They can't use their personal cards. Now, you're not going to make a lot of friends with this because the employees want, as was alluded to in the question, the points, whatever it is. But there are all sorts of other frauds that can go on when you allow employees to use their own credit cards. So a corporate credit card and its mandated use, and you're not going to be Mr. Popularity or Ms. Popularity, but that is the best practice. And then you eliminate all those other ridiculousness that goes on.
Okay, very good. And this is a question that you alluded to during the presentation, but who would be in the best position to ensure that leaving employees are turning in their cards and having their access rescinded? Who's responsible?
Well, it's really an HR function. HR should get the cards and notify the people, but the reality is that it just doesn't happen. So we have all these workarounds in accounts payable. So, for example, if you have a P-card program, once a month they get the list of active employees and run it against the P-card, the list of card holders, and cancel off anyone who's not on it. But really, HR should be notifying the appropriate departments because, I mean, how else are they going to find out?
Okay. All right, and then one last question here. We're implementing a process where our disbursements will be handled by a third party. We process the invoice and send a file to the third party for payment. Any specific controls that we should consider with this move?
When you have, I'm guessing that they're going to have a bank either make a P-card payment, an ACH payment, or print their checks. You need to have the same strong internal controls up front that you would normally have to ensure that you're not paying, the incorrect person.
Excellent, excellent. Well, we've got a bunch more questions here, and I'm going to go ahead and I'm going to send them to Mary, and Mary take the time to go through these and prioritize and send responses. This has been great. I just want to thank you all for joining us today. I want to take a moment to give a special thanks to Mary for putting on this this webinar. I think this was terrific, and we look look forward to doing more of these in the future. And I think Mary's got her slide up there now, and she's got her contact information, both her email address as well as her phone number, and also a link to sign up for the weekly e-zine that she issues. And Mary, if you want to say any closing comments, now would be the time to do so.
Well, I'd like to thank you, Jim, for having us, and I'd like to thank everyone for taking the time to spend with us to talk about internal controls.
Great, great. Well, you will be receiving that survey as we close out the webinar today. Please take a minute or two to complete the survey questions. Help us improve on our webinars, and you will be receiving a follow-up email. So I thank you all and wish you all a good day and a good weekend. Thanks and goodbye.
Thanks. Bye-bye.